The trade surplus has fallen dramatically on the back of lower coal and iron ore exports. June's $3.5 billion surplus has dropped to just under $2 billion for July. Here's Emily Stewart.
Economists had high expectations for July, but a decline in exports to the emerging superpowers of China and India has dampened the results. The ANZ had predicted a $4 billion surplus, and Chief Economist Warren Hogan says he's surprised by the result.
We've now had 5 surpluses in a row. Yes, we were disappointed in the size of the surplus, but it does need to be kept in mind that this is still a very large trade surplus. Annualise this out and it's almost 2% of GDP.
Australian Bureau of Statistics figures show there was a trade surplus of $1.89 billion in July. That's less than half of the June figure. Exports of goods and services fell 4% to $25.4 billion. This was largely due to a 77% decline in coal and iron ore exports to Australia's largest trading partner, China, with the government shutting down almost half of its steel industry for maintenance. Economists say the shutdown is unusual, but it's a seasonal factor and not a concern in terms of Australia's trade position.
I think as Australia's links to China continue to increase, we're going to get more and more familiar with the way that economy works and some of the nuances. It certainly, there is a lot of seasonality in the Chinese economy, and this is a seasonally weak time of year for China.
Coal exports to India also fell more than 47%. By contrast, shipments of rural goods gained in value, rising 5% in the month. Grain was one of the key contributors, rising 22% from the previous month.
We've seen grain exports been really struggling against the headwinds of that stronger dollar. So consequently, the easing of the dollar around that sort of May into June, that certainly gave some more competitiveness to Australian grain exports, which then has led to a pickup in the pace of grain exports more broadly.
Worldwide supply of grain has been impacted by a heat wave destroying crops in Russia and floods in Canada. And good local conditions mean grain traders are expecting a bumper crop from Australian growers.
Grain growers are in a perfect storm. Broadly, they're facing the higher prices, and they're also facing very, very good crops. Globally, consumers are looking to Australia to provide that additional grain to the export market.
Meanwhile, imports of goods and services rose 2% to $23.5 billion. A rise in merchandise goods underpinned the boost in imports for July, but a significant contributor was Defence Department spending of $477 million on 6 Super Hornet fighter jets. Economists say imports are set to keep increasing due to high consumption levels and the need for capital equipment to service the resources boom.
In a way, we're in a bit of a sweet spot where we're seeing the export numbers really surge on the back of strong demand and good prices for our core bulk commodities. But as the investment boom picks up over the next year or so, we're going to see imports pick up well and take away some of that surplus.
Warren Hogan says in the coming months, trade surpluses are expected to continue, but the record highs we've seen lately are unlikely to persist.